Are you feeling overwhelmed by the NASDAQ futures market and not sure where to start? Or maybe you're just tired of watching the NASDAQ futures go by without knowing where to enter. Well, today, in this beginner friendly step by step video, you'll learn how to mark up your NASDAQ chart to scalp or intraday trade. I'll show you a simple charting approach that will help you identify high probability trading opportunities. By the end of this video, you'll gain the clarity and confidence to approach the NASDAQ futures market with a structured plan and start identifying your own trading opportunities. We'll start by marking out key levels, including the previous day high and low, Asia session high and low, and London session high and low. Then we'll analyze market structure and price action to identify potential trading opportunities. An important note, all of my charting is based on New York Eastern Standard Time. Let's begin with a step-by-step process. Step 1, go to the daily time frame chart on the NASDAQ futures. We're going to mark out the previous day's high and the previous day low. So let's look at the chart here. And as you can see, we're on the NASDAQ chart. We're on the 1-day chart. You see that here. And also in the time intervals up here, the D is highlighted. I use TradingView to chart. And with TradingView, all of the tools are here on the left. Once you decide on your favorite tools that you like to use, they'll be put into a toolbar and you can have the bar at the bottom or you can move it around, put it at the top. And you can also make templates for some of your favorite like horizontal rays. So you'll see that as we chart here. So I'm going to use a horizontal ray and I have a template for previous day high and I'm going to mark out previous day high. Previous day high is here. So this chart represents Monday, December the 30th at 7:30 in the morning. And so if it's 7:30 in the morning, I'm on this candle. This is today's candle, Monday the 30th. So this is the previous day. So I just marked out previous day high and you see the level and the label over here on the right side. Now I'm going to grab another horizontal ray and I'll mark out previous day low. So I really do like to be exact with my levels. If you touch on the candle and you look up here, in this line here, you have the prices for the open, high, low, close, and the range of the candle. So I can touch on the candle and look up, and I see that the low, for instance, is 21,498.75. So I can just check and see if I'm correct with my level, and you can see it over on the right under previous or next to previous day low. Now, quickly, if you think it's helpful for me to make a video with how to make your own templates and things like that, let me know in the comments. So moving on to step 2, we're going to switch to the 15-minute time frame. You'll have to adjust your chart to make it visually appealing to you. We're going to place vertical lines at 12 a.m., midnight, and 6 a.m. to visually separate the overnight sessions. In this step, we're also going to use a horizontal line to mark the opening price at 12 a.m. and another horizontal line to mark the opening price at 7 a.m. So let's go on to do step 2. Let's mark out 12 a.m. We'll take another vertical line and mark out 6 a.m. Now, to complete step 2, let's use a vertical line to mark the opening price at 12 a.m. We'll take another horizontal line to mark the opening price at 7 a.m. Before moving on to step 3, let's recap what we did in steps 1 and steps 2. In step 1, on the daily chart, we drew two lines. We drew a horizontal line at the previous day high and a horizontal line at the previous day low to mark out that range. And you can see at 7:30 this morning, the candle or the price is sitting around the previous day low. Now, in step two, we drew out four lines and we took two lines that are vertical and we placed them at the midnight open and then at 6 a.m. So two vertical lines. And then we took horizontal lines, two of those lines, and we marked out the midnight open and we also marked out the 7:30 open. Again, with our vertical lines, what we're doing is we're visually separating our Asia session from our London session. And the Asia session opens at 6 p.m. or 1800 Eastern Standard Time. And we're marking high and lows between 6 p.m. and midnight. Now, the Asia session rolls into the London session. We're not concerned about that. During the London session, we're marking the highs and lows between midnight and 6 a.m. And again, the London session rolls into the New York session, but we're not concerned with that. Now let's move on to step three, where we mark out our highs and lows for Asia session and London session. Let's start by grabbing a horizontal ray. And I have a template for Asia high. I'm going to mark that here. And then I'm going to mark out Asia low, which looks to be about here. And I see that it's close to the midnight open. Okay, so let's grab a horizontal line and mark out Asia low. And you see my labels appear over here on the right. Now let's mark out London. So I'm just going to take a peek. London high is around here and it's around where the midnight open is. So instead of taking a separate line and marking this, because it'll like have text overlay and look crowded over here on the right, I'm just going to tap on the midnight open line and I'm going to go down here to settings and I'm just going to add here plus London high. And then the label appears over here on the right. So that's how I keep from crowding my text over here on the right side. Now I want to mark out London low. And London low is sitting here, which is also, what other line is it? Which is really around the 7:30 open. So instead of placing a new line to say London low, I'm going to click on the 7:30 open and I'm going to add that line here. Now that we've marked up our charts, let's zoom out and get a broader perspective to formulate our trading outlook. We'll use a top-down approach, starting with the higher time frame charts used in intraday trading. These are either the 4-hour or 1-hour time frame. Then we'll zoom down to the medium time frame charts used in intraday trading. These are the 15-minute or the 5-minute charts. Finally, we'll analyze the low time frame chart, which is the 1-minute chart, and this is used for trade execution. So why are we looking at the various time frames and going top down? It's because we want to see the price action on the lower time frames align with the overall trend, direction, or narrative indicated on the higher time frames. It's important to understand that the 1-minute chart is for execution, not for constant watching. Because if you sit and watch the 1-minute chart during your intraday trading, you may find yourself reacting to every up and down candle, and you tend to throw your strategy out the window. So it's not a good thing to sit and watch the 1-minute chart. Now here we are on the 4-hour chart, also known as the H4 chart. And this is what I like to use for my intraday trading. I also use the 1-hour chart. So let me share with you how you align your time frames from this interval bar here. So up here at the top, we have the intervals. If my higher time frame is the 4-hour time frame, then I want to use the 15-minute time frame as my medium time frame. And then I want to use the 1 minute for my execution. If I'm using the 1 hour or H1 time interval or time frame chart, then I want to use the 5 minute as my medium time frame and the 1 minute for execution. Now we're here on the 4-hour chart. Let's talk about what we're going to do here. We're going to start by identifying key areas of interest on this higher time frame. We're looking for fair value gaps. I choose to use fair value gaps because they're just easy for my eye to see. This is an example of a footprint. And so it's a place where the market leaves a clue as to where it may draw back to, as far as where price may draw back to, or where price may react from. So these are areas, these fair value gaps, where price moved quickly with little trading activity. And so it leaves a gap in the price action. Next, we'll move down to the medium time frames, and we're trying to see how price reacted to these fair value gaps and also the time-based levels that we drew out. Did price pull back and fill the gap? Did it continue to move in the direction of the gap? These are things that we're looking for. And then finally, we'll go down to our lower time frames, and we're looking for opportunities to trade around these footprints or time-based liquidity levels while always keeping in mind the bigger picture. So let's read this chart. Now we're looking again on the higher time frame chart, the 4-hour chart, and we are making lower lows. So the market structure here is bearish. The immediate market structure is bearish. We're making lower lows. You see these big 3 candles here. This is us coming to the market at 7:30 in the morning. And this candle, this 4-hour candle, it started forming at 6 a.m. and it'll finish at 10 a.m. But already it's moved through previous day low. So it's taken previous day low liquidity. And so it also tapped, actually, it closed this fair value gap. So this fair value gap, again, a fair value gap is a 3 candle pattern. 1, 2, 3. And there's a gap between the wicks. And you see that this candle has closed that area. Okay, so it's inverted this fair value gap. And when you have an inversion of a fair value gap, most of the time, the trend continues. So this could actually go a lot lower, into the New York session. Doesn't have to, but the probabilities are higher at this point that that will happen. So I'm kind of forming a bearish bias. Doesn't mean it has to happen, but I am forming a bearish bias. Now, where could price reach to, right? Because we've already taken out previous day low. One of the things that I don't have marked here, and I do mark these on my charts, is a previous week high. So it could be targeting a previous week high. You can go on your weekly chart up here and then chart out that previous week high, but I'm not going to do this for this tutorial, but know that, when we chart on Tuesdays, Wednesdays, and Thursdays, you'll see that level on my charts. And so this is a swing point. So this is a swing low here. So price could be targeting here. I mean, will it come down this much? I'm not sure. I don't know. It's a lot to ask of the market. But, you never know. No one has a crystal ball. So that's what the 4-hour is telling me. Let me see if my medium time frame, so from the 4-hour, the medium time frame would be the 15. Let me see if the 15-minute aligns with that. And it is aligning as far as price is trending down. Again, we're sitting at previous day low. We've taken out all this liquidity here. So price is already, before we even get to sit down, and begin trading, the market has already done, a pretty significant move. So then I just want to go on a 1 minute, just to peek and see. And of course, it's aligning. And see, this is why I think it's important when you're just analyzing not to spend too much time on the 1 minute. And also when you're actively sitting at your desk trading, not to concentrate on the 1 minute too much, because you see here at the previous day low, price is actually bouncing. And this could make you get into the trade, but it may not be the right time, because look right here where price had also, started pushing up. And when you're sitting and watching the 1 minute, it can be enticing to say we're reversing from here, but that's not what happened. So again, I don't have a crystal ball. I'm not sure what's going to happen, but let's play it out and see what happens. So I'm just going to go back to the 15-minute time frame, and I will play this out, and we can see how this trade actually goes for the day. So we continue falling. So again, if you were on the 1 minute and you thought just because price was at this previous day low and it was time to buy, you'd be underwater right now. So now we have the 9:30 candle. So this is the New York open right here, and price continues to fall. Let's zoom out a little bit and just see where it can be falling to. So over here, what do we have here? So we have a fair value gap over here. Looks like it was, tapping into that fair value gap. And this is where the market starts reversing. So this is 12:45. So for the morning session, and I'll just pause it here. So for the morning session, we were certainly bearish. And for me now, I'm recording this on a day off, and the market is closed. I'm actually recording this January 1st, and I'm finishing it up the following day. And so I was doing a replay from December 30th. And so I was sitting at my desk, and I was half in and half out on trading. On the 30th, I didn't need to or want to or anything like that. However, I was paying attention to the market. And so I wasn't sure if, price would continue going down. And like I said, by the time I got to the market, like at 9:30, it would be on this candle. And I knew for sure I didn't want to chase the price action. And that was a really good decision in hindsight, because I could have jumped in and made like a couple of points. Yeah, however, price turned around, and for me, a couple of points is just not worth getting my nervous system all shaken up. So let's talk about what we learned here. We learned how to fully mark up our NASDAQ futures chart in preparation for the New York trading session. Opens at 9:30 a.m. and personally, I'm trying to be done by 11 a.m. And so we learned how to do those markups to mark out our time-based liquidity, like previous day high, previous day low, the Asia session, the London session, the highs and lows of those sessions. We learned to mark up our opening prices. I didn't talk a lot about why I use opening prices or how I use opening prices, but very simply, oftentimes if the price is below the midnight open or the 7:30 open, and you're looking to go long, like you think the market will go higher, then it's good for the price to be sitting under here because it's at a discount. And if the price is above the midnight open, and you're looking to short, you're catching it at a discount. So for me, with like with this trade here, if I were really committed to doing this trade today, or on Monday, December 30th, and in fact, this is what my analysis said, is I would like to see price try to reach above the midnight open or the 7:30 open, or at least try to see how it's reacting from those levels before I would go short. But, as we saw in this trade, that at 7:30 the market was already beginning to roll over. And so, as you can see, it just chugged along in the Asia session. It just basically consolidated, which often the Asia session does. And then in the London session, you had a bit of a swing lower, and then it consolidated before the New York pre market open, and price began to fall in the New York pre market open. And so by the time we were able to come on to the charts, or would be able to at 9:30, and it's not be able to because this is the futures market, so you can trade it. You could have traded the Asia, the London session. I choose to trade the New York session. And so by the time I come on at 9:30, the price had made its move for me as far as like with my bearish sentiment. And I knew for sure I didn't want to chase price. And I'm glad I didn't, because look what actually happened with this trade. It actually tapped into a fair value gap that was created, a bullish fair value gap that was created on Friday. So this is Monday and this is Friday. So it picked up some of the liquidity within this gap, and it went a little bit lower, and then it turned around. And so yeah, so for me, it wasn't worth it to chase. But anyone can justify it. You could have still made money on this move down, and then came in, and caught the move up. It was just too much for me to even think about on December 30th when I was doing other things. These are things that we have to think about as traders. Like, are we prepared to trade? Do we have conviction in these setups? Are we willing to pull the trigger when it's time to pull the trigger? And do we have the discipline to not pull the trigger when it's not really the most opportune setup or risk to reward? So anyway, those are some things to think about. Hopefully you've learned from this video. If you found this video helpful, please give it a thumbs up and subscribe to join me every Tuesday, Wednesday, and Thursday for live NASDAQ futures charting sessions. Don't miss out. Learn to identify high probability trades and improve your trading skills. Let me know in the comments below what your biggest takeaway from this video was. Let's learn and grow together. Until next time, be well.